Do you think that there's no opportunity in today's housing market? Well, you better think again. What am I talking about? Well, let me show you. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update for January 2023. Crazy. Okay, so we know that obviously the market has definitely shifted. We've seen a complete slowing of the market, and it's directly related here to the interest rate that doubled last year, right? We started last year, January 2022, at 3.2%. We finished the year at 6.4%. Realize that has never happened before in the history of interest rates, okay? And it definitely decreased the average buyer's purchasing power by 30%. That's huge, can't be understated. We know that the 30-year fixed rate typically goes directly in line with the 10-year treasury yield. At least it has for the past 50 years, and that average spread is about 1.7%. But we know today the average spread is about 2.79%. It's about a point higher than it normally is. Okay, if we look at the graph this way, this is kind of our average right here over 50 years. This is the spread that's increased all throughout last year. I think this is an easier way to look at it, what was actually going on. So beginning of the year, we know that inflation started to spiral out of control. We've had the highest inflation in the history of the country. The Fed started raising the rate. We got halfway through the year and realized that it really wasn't working, right? We'd raised the rate a couple of times and inflation was not tamed. So when we got towards the middle of November, we started to see things starting to break. And then we saw rates starting to decline for about the past 7 weeks, although we're still at about a 1% difference. Okay. So Lawrence Yun, chief economist at NAR, says, the up and coming months should see a return of buyers as mortgage rates appear to have already peaked and have been coming down since mid-November. I think that is the case. We saw a little uptick last week, but I really think buyers are looking for some stability in that rate. Once they know that this is kind of the new rate going forward, I definitely know that we have enough demographic demand where they'll start to come back into the market. Okay. As far as home price updates, though, look, nobody's really calling for a market crash. I just did another video on basically all these headlines that do more to terrify than they do to clarify. You should definitely check that out. About looking at context. Ivy Zellman, -5%, Realtor.com +5.4. But when you look at the average of all of these, we're talking about basically a flat market. Realize this is an average and this is nationwide, so we may see some markets that do have a little bit more of a decrease. There may be some markets that still actually overperform and come in with a little bit higher appreciation than that. Okay. However, this is something to actually consider. When we look at the pre-pandemic home appreciation, we were at 12%. When we look at through the pandemic, we had 38% appreciation. That's huge, and it's almost obviously unsustainable. Okay. However, when we start to look at homes that are actually having price reductions out on the market, realize November was probably the worst month. We're looking at about a 1% reduction, right? So again, if you made 38% over the past 2 or 3 years and you have to give 1% of that back, it's probably not too bad. Okay, definitely not any type of market crash scenario, right? Have home values hit bottom? Well, we don't quite know yet. Case Shiller, FHFA, Black Knight, and CoreLogic. This is the latest data we have from them. It's back to October. We don't have November, December numbers yet. But when you look at them, you could really see how here, August looks like the peak was kind of there as far as the slowdown, and things are starting to kind of recover. Remember, we just don't have the inventory there, and we still have strong buyer demographics that we're going to be feeling the impacts of that over the next few years. When we talk about young millennials entering the market, keep in mind last year, 45% of all buyers were first-time buyers. Okay, so I've heard this a lot, even from other agents. If we just look at this 4,090,000 number, okay, this is basically the December pre-existing sales. This does not include new construction, but keep in mind, if we divide that by the number of days, we're still selling about 11,000 homes per day. So I wouldn't say that the market is frozen. That 11,200 number equates to about 8 houses every minute are still selling across the nation. Okay, so things have not come to a complete abrupt halt. But as far as the opportunity that I was talking about in the market, well, we know that basically this year we've seen a significant increase in our active listings, right? Our inventory. We've definitely seen the inventory increase. Keep in mind, just for reference, we've gone from about 1 month of inventory to 2 months worth of inventory. So it's essentially doubled, a little less than doubled, right? But still nowhere near what we need to have a balanced market. But this is the other kicker. We've seen pending sales slowing down, right? So we know that things are taking longer to sell. They're sitting on the market longer. And what that really means is this is the opportunity if you are a buyer right now, right? David Stevens, this guy's really smart, former assistant secretary of housing, said, be advised, this may be the one and only window for the next few years to get into a buyer's market. Again, not a buyer's market in the traditional sense of months worth of inventory, but more of a buyer reprieve right now, right? Previously, we saw in the past couple of years, the home went up for sale. There were multiple offers the very first day, and buyers had to write some ridiculous offer with no contingencies, all these other things. Now that's not the case. Things are taking, weeks to sell, so buyers can actually take their time. They don't have to make a decision with a gun to their head, and they could actually do a favorable type of transaction where they can do inspections, everything else, and requests for repairs and stuff like that. Okay, so he said, remember, the Federal Reserve data shows home prices only go up and always recover from recessions, no matter how mild or severe. Even after 2008, right, prices came back. So long-term homeowners should view this market right now as a unique buying opportunity. Okay, what can help with some of that? Well, adjustable rate mortgages and also rate buy downs. Right now, I know what you're going to say. You do all these videos that, it's nothing like 2008 and all this other stuff. And here you go, you're going to shoot your mouth off about adjustable rate mortgages, right? Everybody knows back in 2008, adjustable rate mortgages and subprime mortgages were the problem. They were basically what was going on. People were given mortgages that they couldn't afford. Okay. But I want you to realize, this is Lori Goldman here of Urban Land Institute, the risk of arms were substantially mitigated by the regulatory reforms put in place after the 2008 bust. Today's arms are not the risky products of 2008 or even pre-bubble versions. Arms are no longer something to fear. In fact, they could help borrowers save money and reduce barriers to home ownership. Okay, so what that means is basically before the last crash, what lenders typically did is they looked at an arm, right? It started off real small, and then after a couple of years, it went up, right? And what they did is they qualified someone on that low version. Oh, you can make this low introductory rate payment. Great, you qualified, right? They didn't care that in a couple of years, when the thing went up, the person couldn't pay the loan. Now it's the reverse. They look at that higher end and make sure someone can pay the higher end, right? That's what you're getting qualified on. So this reduction here in the first couple of years really is just kind of a benefit. And like I said, this can help people actually get into the market right now. Okay, so anyway, I thought this is also interesting here from Real Estate News. Temporary rate buy downs are a hot trend right now for mortgages. As borrowers face higher costs of home lenders, some buyers are exploring alternative traditional mortgages in a period of rising interest rates that's expected to continue into 2023, right? Buy downs are a less costly alternative to a traditional fixed rate mortgage. This is true. We may also see some seller financing, right, coming back into play too. That could potentially be what's going on. So anyway, if you guys have questions about what's going on in the market, check out my other video about what I said about headlines. Keep an eye out for my local market updates. I'll be doing one on San Diego and Sarasota here shortly. And that's it. If you have any questions, let me know. Reach out. If you want to know what your home is worth, is this a good time to buy or sell, or whatever else you've got going on, just hit me up. Let me know. I'm always happy to answer any of your questions. And that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.